This example will demonstrate the use of Fibonacci circles in a situation where there's a gap up in an established uptrend, which can be helped first by the placement of a Fibonacci retracement that's fairly small and has levels running through the key ranges down into the gap fill range. Normally, the Fibonacci circle can use the same points as the Fibonacci retracement, and it's a preferable bonus feature for this to happen where the central circle encompasses a swing point, but it's not entirely necessary, and in some cases it might not be possible. As usual, areas of interest are places where price contacts intersections between these two Fibonacci tools. Since price has recently fallen onto one of these intersections, there is more potential for opposition to the current downtrend with neutral to even bullish movement. But it doesn't guarantee there will be a sharp upswing right away or at all. Though in this case, price manages to stay aloft, and here we can see support immediately followed by resistance during this short-term volatility, where price does bounce off another intersection at the same Fibonacci retracement level, only to be resisted right away as it made contact near the intersection two retracement levels higher. And just like before, a reversal isn't guaranteed. Price can simply just be more neutral at this area prior to moving higher, in which case this next intersection would become highly relevant. There is stronger short-term resistance with bearish candles, but again just a pause rather than a reversal. These following intersections don't become relevant since the uptrend continues and price does not contact them. Also, it's possible for horizontal levels to present stronger support even at areas beyond the Fibonacci circles and intersections with them. After continued difficulty up into the 300s, we now have another example of a gap up. So we can do the same things like before with the Fibonacci retracement and circles. Since attention in the broader context is focused on the gap being filled, intersections like this in the gap up range are less important, especially at these earlier stages where the circles are much closer together. Since there's a complete gap fill this time, the logic of having more confluence at this next intersection can reason support potential is stronger here. And yes, it certainly can be, especially with the downtrend being opposed at that area. But yet again, it can't be relied on to be a 100% guarantee for a sharp bullish reversal, especially with selling volume remaining consistently high, following the double top that formed in the gap up range that is also comprised of very clear bearish candle patterns. In contrast, this next gap up is filled with less bearish context, so the balance is much more favorable to the bullish side, which also has the same confluence of factors, that being an intersection of the Fibonacci tools at the gap fill level,